Good day and welcome to another WizzWatch. This is your host Marlin. Rolle. Today is Saturday, October 10, 2009, and I have a few charts that I would like to talk to you about for trading in next week. The first chart of the day is a chart of the Dow Jones Industrial Average, and if you have a close look at this chart in the volume area, you notice that the Dow ended the week trading with lighter than average upside volume of 3.77 billion. Its average weekly volume is basically 4.95 billion, so we need to see heavier than average volume coming to the price of the Dow in order to lift it a lot higher. As for now, we are currently above our 5, 10, 32, and 50-week moving average, but below our 200-week moving average in the 11,220 area. And what we are looking for is a break of its old price high right here at about 9,918 in order to take the Dow a lot higher. But the Dow ended the day trading on Friday at 9,864.94, its highest close of the year, up 377.27 points or 3.98% on the upside. Next up is a chart of the Nasdaq Composite Index, and if you have a close look at this chart, you'll notice that the Nasdaq has been on a monster run of 23 of the past 31 weeks since March of 2009. And if you have a close look in the volume area, you'll notice that the Nasdaq ended the week with heavier than average volume coming into the price of the index above its average weekly of 11.04 billion and the week with volume of 11.09 billion. We are currently above our 5, 10, 32, and 50-week moving average, but it's below its 200-week moving average in the 2,215 area. And what we are looking for next week in trading is a price break on the Nasdaq to the upside above its previous high above 2,167.70. To end the week, the Nasdaq ended trading at 2,139.28, up 91.17 points or 4.45%. Next is a chart of the S&P 500, and if you have a close look at this chart in the volume area, notice that the S&P 500 ended the week with lighter than average upside volume of 18.35 billion, and its average weekly volume is basically 21.75 billion. So we need to see heavier than average volume coming to the price of the S&P 500 in order to lift it a lot higher, as the index is currently above its 5, 10, 32, and 50-week moving average, but below its 200-week moving average in the 1,247.54 area. And what we are looking for next week is basically a price break of this 1100 area in order to take the S&P 500 a lot higher, as the S&P ended the week trading at 1,071.49, up 46.28 points or 4.51%. Next up is a chart of the gold index, and if you have a close look at this chart, you'll notice that gold came from a price low in October of 2008 of $681 to a price high at about $1,061.50 after taking out its previous price high set in March of 2008 at around $1,033.50. As for now, the index continues to move on the upside above its 5, 10, 32, 50, and 20-week moving average, but if the price of the dollar continues to decline, the price of gold will continue to advance. And what we are looking for in trading next week is basically a pullback, a 50% retracement from this $1,049 area to around the $1,025 area before the index continues to move to the upside. But to end the day trading on Friday, gold ended the week trading at $1,049.40 per ounce, up $46.40 or 4.63%. Last but not least, it's the oil index, and if you have a close look at this chart, you'll notice that oil is basically moving in a sideways consolidation for the past 21 weeks from a price low of about $60 to a price high of about $75. As for now, the index is currently above its 5, 10, 32, and 50-week moving average, but below its 200-week moving average right here in the $75 area. To end the week, oil ended the week trading at $72.25 per barrel, up $2.30 or 3.29%. Please keep oil, gold, the Nasdaq, the Dow Jones Industrial Average, as well as the S&P 500 on your watch list going forward in the week ahead. Thank you again for listening to another WizzWatch. Have a great day and happy trading.
This has been another WizzWatch presentation. These stocks are not buy recommendations. Please do your own due diligence or get help from a professional before trading.